Good afternoon and welcome to the program. This is Business Incorporated, Monday, March the 14th. I am Bosin Mafaye. We are live to you from Channel's global headquarters in Lagos, Nigeria. Let's get started. Egypt has devalued its currency, the pound, by nearly 13% following recent pressures from severely depleted foreign currency inflows. And Ivory Coast Eurobonds yield fall on Monday after Sunday's deadly attacks leave at least 22 people dead in the West African nation. Plus, Nigeria's Bureau of Statistics set to release February inflation figures that will be on Wednesday, the 16th. Now look at the rest of the programming. Egypt, Africa's largest economy to the north, has effectively devalued its currency by nearly 13% today following recent pressure coming from severely depleted foreign currency inflows. The Egyptian central bank also offered $200 million today in an interbank auction at about 8.85 Egyptian pounds to the dollar. That's up from 7.73 previously. Foreign currency inflows have been strangling businesses and threatening inputs of basic necessities, including medicines. Down south in West Africa, Ivory Coast Eurobonds fell today after militants linked to Al-Qaeda said they led an attack on 3 hotels on Sunday, leaving at least 22 people dead in the West African cocoa-producing nation. Yields on 750 million Eurobonds, Ivory Coast due July 2024, jumped as much as 12 basis points today before trading 5 points higher at 7.16% at about 8 a.m. in London. Ivory Coast, the world's biggest producer of cocoa, has been on high alert since November when Al-Qaeda-linked insurgents led an attack at a Radisson hotel in Mali, in which about 20 people were killed. Let's get to the broader market around the world. Stocks in Japan and China led gains on Monday, extending a rally on Wall Street, which closed at its highest level so far on Friday. Tokyo's Nikkei 225 finished the session up 1.75%. Hong Kong's Hang Seng Index ended the day 1.2% higher. And the Shanghai Composite closed up almost 2%. South Korea's benchmark Kospi Index closed flat at 1,972. And we're still looking at Mario Draghi's tonic for the European economy last week. That's still rallying the market from Asia now to Europe. Let's get a broader sense of how the market's still continuing in the green territory as all eyes are now focused on the US FOMC and the Bank of Japan under Kuroda. Let's bring in Javier Aguedes, who is DWTV financial correspondent for Channels Television Live at the Frankfurt Stock Exchange. Good afternoon to you, Javier, and welcome back from the weekend. Let's look at European markets looking good today. After good closures on Asia, the driver is the Mario Draghi's tonic. Is the market still energized by Mario Draghi's ECB? Do you think so?
Hi, Bosun. Good afternoon to you, too. And effectively, it is. If you take a look at how the markets have been reacting, this is basically a chain reaction. We had the good closures that you mentioned on Wall Street, then the Asian markets also in the green, and now we are seeing a very good trading session so far. The DAX, the main German index, up more than 1.5% as we speak, and it has been moving up and down that 10,000 points mark, which is a psychologically important mark, and it seems like it is recovering very stable. It is not only due to the measures by the European Central Bank. We knew that the reactions were quite mixed at the beginning. Now it seems like the markets have digested that, but it is also due to the relatively stable oil prices that we are seeing right now. So the conditions that investors were hoping for, a stable oil price and some measures by policymakers, seem to be having the effect that was desired, and that's why we are seeing some quite courageous investors that are going for a little bit of risk right now.
Let's stick with the biggest elephant in Asia, China reassuring the financial world that it will meet its growth targets. Do you think the rest of the global markets should lean on China?
Well, the global markets have been leaning on China, as we know, for a long time now, and some look at it with a little bit of skepticism, of course, but when we hear words like these, the Chinese authorities saying we will meet our growth targets, if they say that they're going to do that, believe me, they will, and that basically means that they will make everything possible and that they will intervene if necessary as much as possible through monetary policy, through stimulus measures, in order to make that economy grow at the pace that they want. Now, of course, we know that some question the legitimacy of the growth numbers posted by China, but we know that at least in the past year, the economic growth targets were met and the Chinese central bank intervened many times in the economy. So investors basically are hoping that this is going to be the case this year as well, in order to make sure that there are no shocks on the economic growth in China, as many feared in the last couple of months.
Do you think that investors in Europe are positive as they were on the ECB, Mario Draghi, as much as they are on the US FOMC and the Bank of Japan? Do you think these two central banks will follow in the footsteps of the ECB?
Well, in general, what we have been observing is that investors have heavily relied on policymakers to somehow make things work, despite the fact that the economies are not really advancing at the pace that everyone was imagining. That is especially true for the European Central Bank, that is for the Eurozone, of course, and also for the Bank of Japan. In the case of the United States, we know that the economy has been growing quite strongly. We also know that the Fed wants to increase the interest rates again, but what most investors are thinking right now is that the Federal Reserve is not going to somehow ruin the party by now announcing a short time increasing of interest rates. So you can definitely say that they are relying on a scenario where both the European Central Bank, the US Federal Reserve, and also the Bank of Japan are trying to avoid shocks at any time right now, because the markets seem to be now recovering from the jitters that we saw at the beginning of the year. But, of course, Bosun, you know how it is. We never know what is going to happen.
Yeah, we never know what is going to happen, but let's hope no one spoils the party, as it were. Things are looking really smooth right now between the FOMC and the BOJ. Thank you, Javier. See you for the rest of the week here on GWTV Channel Television. News coverage of the markets. Javier there from the Frankfurt Stock Exchange. We'll come back after the break. And one of Nigeria's biggest banks today reported better than expected numbers, cash dividend coming through for GT Bank. We'll talk about that quickly after the break. Then we'll take a look at a preview of February inflation. That's due on Wednesday the 16th. We're back with Business Incorporated.